Hey guys, welcome to my YouTube channel. So, in this video, I'm going to cover Nuvama Wealth Management. Why am I covering Nuvama Wealth Management today? Because not a lot of people are talking about this business these days. Well, a lot of people are not talking about businesses at all these days. A lot of the commentary is around wars and the Middle East, and I think it's a good time to dive deeper into some of the businesses that we have. Right, so let me quickly start off with. I'm gonna skip the industry context. You guys can have a look at it if on your own time, okay? But I'm gonna start with the business analysis, right? Nuvama, what is Nuvama? So Nuvama is in the financial services industry, and the subsector is wealth management, okay? In the financial services, it is an integrated platform offering a few things which are, if I'm to name them, wealth management services. Then they offer some capital market services, they offer asset services, and they are also offering asset management services. Right, so there are four revenue engines in this business, and they serve HNI, UHNI family offices, especially in the wealth management business. They serve institutional and corporate clients as well through the capital markets, asset services, and through their advisory, there are managed products, there's lending, various things. And what's been happening over time is that there's been a shift. There's been a shift from a more transactional and capital markets linked model towards a more recurring wealth led revenue mix. And what's the evidence of this? The evidence of this is, if you see, the company has been growing at a 30% CAGR for the last 4 years, but the wealth management and the asset services have been growing far more at a far higher pace. Wealth management used to be 48% of the pie in FY21, and as you can see, it became 56, 64, 57. Now FY25 is kind of an odd case, so I'm gonna kind of ignore it because capital markets and asset services kind of rose in their cyclical. It was the bull market, so these services kind of rose in that year, so it's kind of misleading. But again, this year this figure is back to 57%, so we can see it's gone from kind of like 40% to the 50% in the last 5 years, right? Wealth management has become kind of more important, especially as compared to capital markets services, right? And even in wealth management, the managed the MIPS division in Nuvama Wealth. So wealth management has kind of two bifurcations: Nuvama Wealth and Nuvama Private. Nuvama Wealth is kind of catering to your HNIs, UHNIs, clients, individual clients, and private is catering to like family offices and those sort of stuffs. And in both divisions, you can see that the individual products, which is the MPIS in Nuvama Wealth, has kind of gone up significantly. And in Nuvama Private, the variable to track is the IRR, which is the recurring revenue, and that has gone up as well. So basically the key variables are inside wealth management are telling us that there has been a structural shift from a broking or a more transaction and a capital markets linked model towards a more recurring wealth led revenue mix, right? So this is kind of the big shift playing out in this company. Now, if we go on to the company performance in the quarters, you can see there was this huge dip in Q2 FY26, right? So this was kind of the big event which happened last year when Jane Street was kind of came under the lens of SEBI, and they kind of had to drop out from trading in the Indian markets. And in asset services, so in this section, in this segment, in this business segment, Jane Street actually had a huge contributing portion. So that kind of was a big hit to Nuvama. What has also happened this year is that the capital markets, which kind of went crazy last year, have died down. So that's another impact where the capital markets and the asset services, both of these segments, have not played out really well this year. Asset management is a 2% business, so I'm not going to talk about it as yet. But this year, what has happened is, and wealth management is kind of a 20% CAGR growing business where, they've hired a lot of RMs this year. The RMs are going to start producing results in a year or two. And this is going to be like a 20% growth business. But due to the downturns in these two segments, which is kind of the rest of the 48% of the business this year is kind of flat in terms of revenue growth. And if you look at some of the numbers, there's a successful shift in revenue mix, with the wealth and private segments now contributing 57% of the total revenue, up from 50% in the prior year, right? Strategic pivot. Okay, so this is in the asset management section. The rationale for the score, or if we look at this quarter, structural pivot is evident. Asset services demonstrated higher following the loss of a major client. 50% of the revenue loss was recovered within the quarter, right? So this was the major client loss, which kind of created a little bit of a speed breaker in the trajectory of Nuvama. Now, if we look at the future growth prospects, we have a score of 7.7, which is good, but not crazy, and which is fair, right? And like, Nuvama is not going to grow at a crazy pace. It's been growing at a 30% pace for 4 years, which is crazy, to be honest. But now this year there's been a speed breaker, and for future years we kind of the management is wanting to grow at 20% annual, right? But without jumping a lot, what I was basically trying to say is that 7.7 is a fair growth score for this kind of a business. Now, if you look at the future growth prospects here, a lot of these catalysts are in the asset management segment of the company, which is kind of like a 2% business right now, right? And they're also expanding their asset services through RTAs, right? So this again comes into asset services, right? So what I'm trying to say here is that yes, the catalysts are kind of in these two divisions, but wealth management doesn't necessarily need any event driven catalyst to grow, right? As I mentioned, they've hired a lot of RMs this year. Those RMs are gonna start bringing in revenue within a year or two. What this is gonna lead is in the continuation of the trend of the wealth management in private and as well as in Nuvama Wealth, kind of the revenue going towards more of this recurring stream rather than a transaction-led stream, right? These RMs are gonna kind of continue this trend which is in place, and which in turn is going to lead to this continued 20% CAGR in the wealth management department, right? It doesn't necessarily need some sort of, okay, on this date this is going to happen and then we're going to go um, for exponential growth, and that is what is not captured here in the growth and catalysts, right? So this is kind of, when we look at the growth of this company, what we need, what view we can have is the wealth management should grow at a 20% CAGR, right? Asset services, asset management. Now, asset management has said, and which we'll discuss in the guidance trackers as well, that this business will start bringing in profits when it touches an AUM of 20,000 CR, right? So that's where a lot of the growth catalysts are coming up, which is to reach this 20,000 crore AUM, right? But what I was basically trying to say is how you can look at the future growth of this company is that this segment is going to grow at 20%, and these segments should support the 20% growth in the wealth management department, right? Yes, capital markets are cyclical. Yes, this year we've seen, or this year we will see how they impact the revenues down, and asset services has been impacted this year by a major loss of a client. But in the big picture, these segments need to kind of support the 20% growth that will be seen by the wealth management department. That's what needs to be tracked as well. Now, if we look at the guidance history, something which I just mentioned, that the management aspires to maintain a growth trajectory of 20% plus, right? In Q3, they have reaffirmed once the base is established. So this year is kind of like a base formation because of the events, two big events which have happened in Nuvama, which is the client loss as well as the capital markets cyclicality playing out, right? So from FY27 onwards, we should go back to an annual growth trajectory of 20% plus, right? Which has kind of been 30% for the last 4 years, mind you. What else are the management guiding on? The wealth management segment aims to achieve a cost to income ratio of 60% over 3 years through really RM productivity improvements. Yes, they went haywire on hirings, and slowly is currently outperforming, sitting at 53. Okay, that's not bad. From a initial set for 60%, reiterates 60%, will move from 65 to 60%, even if given our business proportion, and our cost to income will remain is at 53%. That's not bad. They're kind of hitting this target. Asset services yields in the range of following segment rebasing. Okay, let's see. Revised upwards due to acquisition, to move around to maybe, we should be more around to maybe over a period of time. Okay, so yeah, there's a lot of guidance happening, but let's see what happens. We need this kind of to stabilize for some time, right? So in terms of revenue and margin, these are the types of guidance that we are tracking on the platform. What else is happening? Of course, the SIF scheme is being launched so that they can target some lower ticket customers and kind of take their AUM towards the goal of 20,000 CR, right? So break even by September, October, okay, which they weren't able to do so that's a miss. Break even maintain 12 to 15 months from February. Okay, so another 12 to 15 months, so they already delayed their initial goal. And I think we should break even FY to somewhere around the middle, so that's kind of a repeat of this goal. Yeah, so they want to reach this kind of magic figure, but they are saying for some time now, Q4 FY25, that, so it's been some time now, but that will happen in another couple of quarters. And how that's going to happen is through this um, SIF scheme. This is one of the ways which they're going to get there. A recent update came where they're expecting it to launch within, so the next quarter they should be able to launch the SIF. It's just a migration of our existing well-positioned AIF strategies for lower ticket customers. Okay, so these are some things we are tracking on the business, right? Now, this is a new section which has been added on the portal, which is the moat analysis, right? All the Warren Buffett, Charlie Munger fans will be celebrating by seeing this. But this has also taken inspiration from Michael Porter, from Michael Mauboussin, from a book called Competition Demystified, right? So different things have been picked up from different sources to kind of create this new section, which is moat analysis. And before going on to this kind of conclusion of the moat analysis, let's kind of dive deeper into what the analysis is saying, right? So in terms of competitive advantages, where we have these kind of 5 categories, in terms of brand and intangibles, yes, Nuvama does have a brand that's present, okay? In terms of switching costs, yes, there are switching costs. Wealthy families, you can say once they're locked in, it'll be difficult to move their assets to another wealth manager. Network effects don't matter in this industry. Cost and scale is not a cost leader. It competes more on a quality basis rather than a cost basis. And regulatory licenses are kind of standard in this industry, right? So there are some competitive advantages present with Nuvama, which kind of leads to this narrow moat categorization of the company. Now, this is more of an industry view based on Michael Porter's frameworks. This industry has been termed moderately attractive because the relationship stickiness provides installation, but competition is intensified, which is very true, right? The moat is widening as Nuvama expands into alternatives, where product manufacturing creates stickier relationships than advisory alone. Yeah, so this is kind of like a durability verdict of their moat, not only in terms of asset management, but all of their business segments. So the output is, yeah, it is there, but it's kind of a narrow moat. It is widening because they're expanding into these new products, but so there are some threats as well to the moat. But all in all, what I'll say is, in this industry, Nuvama does have a narrow moat, which is widening, but it's not a strong reason to kind of hold this company. The kind of reason to hold this company would be kind of a mispricing right now, and it's kind of an asymmetric bet right now. But yeah, it's not like a capital asset heavy business which has a huge wide moat. It has a narrow moat, and it's doing pretty well in terms of the big structural shift it is trying to bring about in the company. So yeah, that's my kind of business analysis of Nuvama Wealth Management. It's kind of scoring in the middle on most rankings, but it is what we expect. It's been a 30% CAGR business, which has kind of hit a speed breaker year this year, but we should see it going back to 20%, or we expect it to go back to 20% compounding soon. And maybe there's an opportunity right now to play this inflection. But yeah, that's the business analysis of Nuvama Wealth. Thank you.